Okay, hello everybody, and welcome to this week's edition of Selfwealth Live, the technical analysis edition. Here for another great week on the 29th of July. Jason, lots of things happening in the world, politically. Not really doing much to the markets from what I can see on a big basis. But how are you this week?
Hey, Rog, I'm good. Plenty of price action to talk about in markets as there always is. So yeah, hopefully we've got some interesting things to talk to the viewers about. I'm looking forward to a good show. Plenty of stocks from the viewers as well, no doubt coming up later on.
Yeah, for sure. Well, hopefully there's some great price action that you've seen, right? But looking forward to seeing the viewer stocks as we speak around viewer stocks. Obviously, what we do in these sessions is we go through our general market overviews on the Australian market, the American market, and the Hong Kong markets. They're the ones that are offered by Selfwealth by Saif. And obviously, I have the expertise of Jason, who's a 30-year trading professional. I probably just can't say that and do it justice, but his systems over time have proven to me and to many other people that if you have a proper structured system in place, you can certainly beat the markets, right? So we talked a bit about that last week in the first 10 minutes of the show. So it's a great little piece, first 10 to 15 minutes of the show last week. So if you want to check that out, it's bit of inspiration there for you if you haven't seen. So, but let's get cracking with today's show. Let's have a look at our disclaimer to start off with. If that's okay.
Yes. So everything today, general commentary only, no personal advice in any of this. And I'll quickly put up that disclaimer that we do put up each week, and that just goes through that. I'm also not part of Selfwealth Saif. My business is Motion Trader, so you see my details at the top with licensing, and Selfwealth's beneath there, general commentary, licensing, all of those important things are on that slide.
Fantastic. All right. So, and I think I actually forgot to mention that we'll go through a few general questions after the overall market overview that we've got from a viewer, and then hopefully we have time. I'll set the rule out here, right here. If you like, we're going to try and do 2 tickers for each person. Obviously, we've been getting a lot of tickers, which is great. So hello everybody on the other side of the line. Like, this is fantastic. We're getting so many tickers. Is being able to manage them all is the challenge for us now. But we love it. We love every week coming here and doing these shows for you, and hopefully you guys getting some value, and we get some certainly value out of it as well, right? So feel free to send through those tickers. And if we don't have enough, then we can always circle back to people's extras as well. All right. So, all right, let's get cracking with the Australian market, if that's okay then, Jace. Let's have a look.
Absolutely. So let's go into our ASX 200 chart. And its prices have really been consolidating for the last couple of weeks. And that follows a strong move higher about 3 weeks ago. You can see that here, just where I'm running the cursor. So prices broke higher after this 5 ways trek sideways. You can see prices were traveling sideways along the moving averages. Then we got the breakout. And I think the latest breakout is confirmation that the path of least resistance remains to the upside. And it's interesting looking at the lows through the most recent consolidation, because what you can see there, you can see the lows are generally rising through that period. They're progressively getting higher. So for me, that's a telltale sign that buyers are increasing their bids and paying up to get into the market. And so far, we've seen that evolve through with higher prices. Just looking at the last week, I think it's generally positive that prices have been steady. It just gives the market a chance to work through the latest rally, and then it starts to potentially build a platform that might be able to support higher levels as we go into the weeks ahead. The key takeaway when I look at this chart is that price is above the rising moving averages. Got the 50-day, got the 100-day moving average. Both are trending higher, and price is above those rising moving averages. So that's a textbook bullish trend. And when that's the case, I tend to find the odds favour further upside. Maybe not tomorrow, maybe not next week, but broadly over the period ahead, the odds tend to favour higher prices. Now, an important point to make on that, of course, is that doesn't mean that a larger or longer pullback can't occur. There's nothing to say the market can't come back to the 50-day moving average or even the 100-day moving average, and you get that larger consolidation. That's always a possibility. And that's what risk management strategies like stop losses and trailing stops are all about. It's about trying to stay on these trends while they're in place, giving them room to move around, but then having that exit strategy in place when things ultimately do change at some point. Like we saw in April, things changed at some point, and the exit strategies help protect capital and get us out when things aren't working out. But for me, rather than stand back and worry about what could go wrong, I think the correct approach here is to go with what's currently working, and that continues to be a rising trend. Just having a quick look at the ASX 200 on an equal weight basis, that's been interesting over the last couple of weeks, and I think is well worth paying attention to. Look at this rally we've seen off the lows from mid July. So you remember on that ASX 200 chart, the market's really been moving sideways for the last 2-3 weeks, and you look at the equal weight, it's had this strong advance. And when you line them both up, it's been, so the equal weight's been up as much as 4.4% in the last couple of weeks, whereas the ASX 200 is up about 3% over the same period. So we're seeing outperformance in the equal weight, and equal weight is well and truly now into all-time high territory. We can just compress this a bit. You can see the previous high from January 22, and then also in February. February was the all-time high, and now we've got a new all-time high in the equal weight. So I think the outperformance in the equal weight tells us that this is a broad-based rally. It's not just about a few big stocks pushing or pulling the market higher. There's money flowing into the market generally, and so it's not narrow strength of a few big stocks or a hot sector. It's a broad-based rally. Prices are currently pulling back after hitting an all-time high last week. I don't think that's a particular concern at this point. Prices had run fairly hard into that high, so it's only normal that they have some sort of a consolidation. Let some moving averages catch up. Some further sideways price action would be entirely normal in these situations. I think the overall structure here, Roger, is positive. Path of least resistance, I believe, is higher. So I'm happy staying long the ASX 200 index, as well, of course, individual stocks that make up both the index and the All Ordinaries and ASX generally.
It's great to see once again that broad participation, and I'm assuming it's the same with the American market, right? Let's have a look.
Yeah, very, very much. So coming across to the S&P 500, well, both the S&P 500 and the Nasdaq hit new all-time highs on Monday, and that takes the all-time high tally for the S&P 500 this year to 15. So 15 all-time highs this year. The first few occurred early in the year, and then the bulk of them has really been in the last few weeks. We've had this streak of all-time highs since late June. From a structural perspective, everything appears in good order. To me, there's a clear sequence of rising lows and rising highs. And also, like we were talking about in the ASX 200, we've got these rising moving averages, a 50-day and the 100-day moving averages are both trending higher. And importantly, price is above those moving averages, which again is textbook bullishness. So that raises a question of whether prices are due for a pullback, because it has been a lengthy stretch above the 50-day moving average without a retest. And as we know, prices always come back to the 50-day moving average at some point. So has this been an especially long run? So the last time the S&P 500 touched its 50-day moving average, it was back down here on the 7th of May. So that's about 55 trading days without coming back and touching the 50-day moving average. So is that a long time? Well, when we go back over time, it is getting up there. 55 days without a retest of the 50-day. It's certainly getting up there, but it's by no means a record. Just look at, you only have to go back to this stretch in, where was it? It's back here. It's back here from late 2023 through to April 2024. So this stretch was 110 days. So as I say, you don't need to look back too far to find a longer stretch than 55. So from that perspective, this current run we've seen, it's not an extreme. It's lengthy, but it's not an extreme. So I think, yes, there's scope for consolidation. That's always a possibility after one of these big advances, but there are no immediate warning signs of anything worrisome. It's a rising trend. Rising trends do pause, they do consolidate, but there's nothing here suggesting that a lasting peak is in sight at this point. It's a case of, for me, going with what's working. What we have here, it's a trending market with the potential to trend higher over, I think, the weeks and months ahead. Quick look at the equal weight for the S&P 500, and it made a new recovery high late last week. Not quite an all-time high. That was back over here in November last year, but it's getting pretty close. I think the positive price action in the equal weight is a sign of that broad participation in the rally, just like we were saying with the ASX 200. So it's not just about Nvidia and Microsoft pulling the market upwards. We've got a broad range of stocks participating, which is typically a sign of a healthy market. I continue to believe the play here, Rog, it's staying long stocks rather than looking for a reason for them to fall. And it's being open to the possibility of further upside. While it's working, let what's working continue to work.
Quick question for me. I'm hearing, obviously reporting season's coming up for many companies, big companies, small companies. Does this play into your mind at all? I know we're sort of talking fundamentals, but does this play at all in your mind on how do you change things for it, or you just, once again, just purely looking at the charts at this point?
For me, it's looking at the price action. If the price action's up, if the path of release resistance is higher, I want to stay with those stocks. They tend to. It's interesting. Stocks which are trending tend to, reporting season often goes well for them. Stocks in downtrends, they seem to be more susceptible to bad news. It's simply because, the market is pricing in what the market is expecting and what it's aware of. Not to say it always goes that way. You get surprises on both sides. Stocks trending lower can get surprisingly good results, and vice versa. But the path of least resistance tends to tip the hand to where things are going to go. I'm not a fundamental player, so I'm not looking at the fundamentals. They do certainly cause an impact in stocks. We saw in Boss Energy, BOE, they surprised the market in a negative way yesterday and saw their share price fall 25%, and that had been trending higher. So surprising things can and do happen. But for the most part, I want to look at the price action. I want to go with breakouts, stay with things that are working, and cut things when they're not.
Of course. All right. Well, let's get on to the Hong Kong markets then.
Okay, so going over to the Hang Seng over in Hong Kong, and the Hang Seng continues to make new highs. Not all-time highs. They're a fair way back in the past. All-time highs are, I think, back in 2018. So we're a long way from them, but still making new highs in this latest period. And we've also got the this sequence of rising lows, which continues to unfold. For me, it's a case of going with this momentum. Momentum is to the upside. Little bit of a pause over the last 3 days, but that comes off a strong rise, so that's to be expected. At this point, that trend is very much to the upside. China's, I think, a really interesting one, and one which I'm closely following. So prices rallied to a 7-month high last week, so getting to the highest level since back in early December. And then over the last few days, we've seen this slow gradual pullback. And so just look at the structure of the rally versus the pullback. So the rally was strong and unfolded quickly. The rallies and the pullback's been a real grind lower. So for me, that's a sign that there's interest in buying. That the up days are bought aggressively, and the down days are look to be being supported by buying of the dip. So that's something we want to see in markets. We want to see investors wanting to get into a market. The other important thing to note with the Chinese market is that it's holding on to most of these gains, and that's been something that's been missing for much of the last. Going back to October last year, the market really struggled to hold on to gains. You'd get those rallies and they'd come straight back, rallies and straight back. And it's really only been in recent times, maybe since, we could say from the April low, that we've seen rallies and the pullbacks have been relatively shallow. Rally, reasonably shallow pullback, and that sequence of stronger rallies, shallow pullbacks has been unfolding. So I think that's a positive sign. And it's something we've only recently started to see. A sequence of rising lows in place. Let's see whether this most recent low continues that trend of rising lows. I think the odds favour that this is a developing trend in the Chinese market.
It certainly looks so. And it's obviously lagging as well, right? So, okay, maybe that's a great overview of the markets there, Jace. Thanks for that. I think let's switch over to a few of these questions that we've got from George. All right, so we probably won't go through all of them because we've got a lot of tickers that we've got to get through already. But let's have a look here, and just give me 2 seconds. Send some interesting questions in, right, to start off with. So, all right. We're talking, can you sort of give us a nutshell around your volatility filter that you generally talk about? What is that about in a nutshell?
Look, with the motion trader volatility filter, a big part of it is trying to avoid those low price stocks which are prone to shoot higher and then come back down just as fast. Like, this isn't an individual stock, it's a Chinese stock market. But just, for instance, just pretend this is a 1 cent stock. Sometimes we see these 1 cent stocks. They shoot higher and then they come straight back down. So the volatility filter aims to filter a lot of those out. And also in medium to larger stocks, if they're just moving around, if they're rising too quickly, they just tend to become overstretched and pull back. So I use a 5-week low as a reference point, and if prices rally more than 35% above their 5-week low, I just filter them from they're filtered automatically from the signals through the algorithmic trading rules, and over time it tends to keep a lot of the smaller stocks out, as we discussed, but also reduce portfolio volatility by avoiding those stocks which are moving too quickly. Like any sort of filters don't just take out filters just don't just take out the undesirables. They also remove some good stocks as well, which you look back on and go, well, I would have liked to have got that one, but that's the nature of a filter. You only know in hindsight that some stocks would have still been good to go forward with, and which ones would have been best avoided. But overall, I think a filter that avoids volatile stocks can help smooth your results somewhat.
Yeah, it's a great point that you make there. Obviously, you just can't take every opportunity, can you? And some will get filtered out, and you've just, unfortunately, no one has the power of hindsight there, right? So, is it this, and the filter that you use is something you've developed proprietary to you, right? So it's not something you can just get anywhere, right? Is that right?
Yeah, look, it's not a rocket science sort of filter using a 5-week low, but just being able to, when you're tracking 2,000 stocks, you don't want to have a complex filtering system, which is like bringing in a whole lot of variables. The more complex something is, the less likely it is to work over time. So I like to keep things simple: 1,500-day moving averages, breakouts, and then applying a process consistently over time. The more moving parts to it, the more likely it is to just get tripped up and not stand the test of time. It's the keep it simple principle. The simple processes tend to be more enduring, and that's what I aim for with what I do when I approach the market.
Okay. All right. Great. Fantastic. All right. So going back to COVID time now, COVID crisis, did you end up being all cash, or was there something that you felt was different from other dips? And was there any indicators that may have alerted you to the huge change that was coming?
I end up all in cash. So here it is. Here's the COVID decline. No warning. If we'd been talking about the markets in the week before, I would have told you we have an uptrend in place, rising moving averages, prices above the moving averages, path of least resistance to the upside. It's and that's going to be the case. That's always going to be the case at a peak. Everything looks to be in a strong uptrend at the peak. Yes, we can look at things like divergence and moving averages, and we can see warning signs. Maybe there's divergence in the equal weight and there's less participation. So there can be signs to say, look, maybe I want to be a little bit less aggressive or a little bit more cautious. But I was looking at this period as it was a rising trend, and this unfolded rapidly. It was a news event. It was a news event unlike anything that had been seen in 100 years. And so for me, it was stop losses triggering, trailing stops triggering, and that was my exit. I wasn't watching the nightly news to make decisions. It was just following the rules-based process, and the calculations for the exits started to trigger. So it was sell things, and as it turned out, I think I sold every stock in my portfolio over the weeks of the correction. And then it wasn't until it was probably around May where I started getting re-entry signals. And that was an interesting period in itself, because there was a lot of fear that we'd only seen the first leg of the decline. We had the people saying, look, this is a dead cat bounce. It's going to go down. It's going to make new lows. So I started getting buy signals around May, and then progressively started to build my portfolio back. And as history shows, we ended up going into an upward trend. It wasn't a bear market rally leading to new lows or a retest of the low. It was a rally. But I heard from many people during this period, during May through to say October, and they were saying, "Oh no, this isn't going to last. The economy is going to really get bad. Stocks are going a lot further to the downside." And they weren't watching the price action; they were watching the news flow. I think that was a mistake. So the news flow kept them out of the market for a lot longer than was necessary. The price action gave us the I won't say confidence, but it gave us the guide. It was certainly an uncertain time, but it gave us the guide that things were changing, and the price action then continued to evolve to the upside. So the news flow can lead to trouble. People would say, "Oh, look, COVID's back. We're going into lockdown. Got to sell." Not what the market did. So price action got me out. Price action got me back in, and that's how it works. It's not about trying to guess what's going to happen next. Just follow what the market is doing is the way I approach it.
Yeah, there's something about knowing what the news of the market that somehow makes people feel smarter, don't they? And I know I'm in that boat a little bit. When you talk about what's happening in the news, and you kind of, but ultimately we're teaching people systems that don't rely on anything on news, right? So rely on.
And look, we saw the same sort of emotional news following during the April sell-off. Most of my portfolio didn't get stopped out on this occasion. I don't know, maybe a quarter of my portfolio or so might have hit its stop losses. I don't know exactly, but yes, stocks certainly hit stop losses during this sell-off. But my wide trailing stops kept me in most of my portfolio, so I've participated in the recovery and added to the portfolio on the way back up as well. But I heard from plenty of people again who said, "Oh no, this is going to get a lot worse," and if you'd been following that news flow, well, look, has the news flow really changed that much? It's, the threats of big tariffs have continued to be a part of the news flow over the course of the last 3 months as the market's been rising. So if you're following the news flow, you're probably still on the sidelines. But this strong rally we've seen, it's been, I think a large part of it has been people who got cleaned out at the low, coming back in, chasing their tail, trying to get back into the market. And we've seen this strong rally back. So yes, when the market's falling, I think we need to have exit points. We need to get out. We can't just say, oh, look, this is going to blow over, because we never know. We never know. Maybe this could have turned into a GFC route, but it didn't. And then so having those calculated unemotional exit points keeps us in for as long as we can, and hopefully sees off swift pullbacks like this. And then we've got rules to get back in and when things change.
Yeah, fantastic. All right. The next question is, roughly how many stocks do you have on average in your portfolio, and do you manage multiple portfolios? I think the best question out of this is, there's 3 questions here. How much time do you spend managing those portfolios?
Yeah, I can have up to 80 stocks in my portfolio. I don't have 80 at the moment. I've got a few different portfolios which I manage. I've got my main motion trader portfolio, which is available on the motion trader website. Just on the homepage of the website, it's free for anyone to access and see what I'm doing. But I've got a discretionary portfolio, super portfolios. I've got different things going on, and time to manage, not very much. So I don't think I've spent. I did something this morning. I might have spent a couple of minutes this morning doing something. I run the data through the systems at the end of each evening, but that also creates some motion trader signals, not just my portfolio. But that doesn't take very long. It's like I've run the systems within 5 minutes. I then put the emails together for members and send them out. But managing my own portfolio, depends what's going on. If it's a COVID sell-off and I'm in the process of exiting the whole portfolio over a couple of weeks, well, it gets a little bit busier, because you've got to place orders, you've got to manage orders, and so on. But when we're in the the upward phase of the trend, and most of the portfolio's positioned, it's like there might be an exit here and there, and a rotation into another stock, or a time exit might go off. But that might all be 5 minutes of a day, and there may be nothing to do for 3 or 4 days of the week. So not a great deal. That's the beauty, I think, of a rules-based systematic approach, which works on price action. Like the fundamental guys tend to get a lot busier because they've got to read balance sheets and announcements and so on. Nothing wrong with doing that. That's their way. My way is the price action. And once the positions are set and the rules are worked out and I know what I'm going to do, so no matter what the market does next, I know what I'm going to do. So I don't know what the market will do, but I know what I'll do. If the market crashes, there's a plan. If it goes sideways, there's a plan. If it goes higher, there's a plan. It's all kind of locked in. So it doesn't take too long once you've already got those predefined rules and thought processes to how you're going to respond. I think that's the thing that trips people up, not really knowing maybe they've got a rough idea of what they might do, but it's not really locked in. So then things happen, things get emotional. It becomes harder to think when things get emotional. It's harder to make good decisions when things get emotional. That's why pilots have checklists. When the engine stops, they just don't go, what should we do now? You get out the set of rules, the procedures that you follow. It's the same thing with the trading portfolio. The market falls, there's a procedure that you follow. You exit things that need to be exited. You keep your cool with things which are above their stops, and you play it according to your rules.
Okay, fantastic. One last question, because it's been a great little segment on just you in 10 minutes almost, right? So, all your systems. I do encourage you to go to Jason's website, where he actually shows your real portfolio. It's tracked by a third-party software, right? So it's real. It's not just a screenshot, right? And you can see his current holdings in his motion trader portfolio there as well. So just go to motiontrader.com.au for that. Last question is, is there any sort of your filters at the start of 50 and 100-day moving averages, and is it a 70-day breakout as well? Is there any sort of scanners that you know of that people can use, or?
I don't know. Like I use trading system building trading software, which all of this is built into. There's all sorts of stuff available on the internet. Like I think the key is getting good data is really important. Like I see some data providers are a bit patchy with their data. They don't adjust properly for special dividends and some corporate actions. So there's adjustments to data needs to be made. You've got to have good data, and you also want to be able to scan. Well, I want to at least be able to scan the entire market, not just like the top 100 or what be it. It's like a lot of the interesting opportunities come from outside the big names. So you can always look around for stuff, or you it's like depends if you really want to do it yourself, like from building the rules to getting the software and getting the data. We can do anything. We can do anything we want to really get into, or if or you find a service like mine where I do those calculations to present them, and then it's a case of getting the information, deciding, well, how do I then use that information myself? What stocks do I buy? What's on the move? Do I want to do a more analysis of it? So depends where you want to go. You can do but that of course is more time consuming. Like one of the questions was about time. How much time? And this is constantly a thing I hear from people. They say, I don't have much time, and I understand that. Busy doing all sorts of things. So that's where I come in. I do the scans, I provide the signals, I do the calculations, I provide the exits, so that strips back a lot of the time, and then time can be put into, okay, which stocks am I going to build a portfolio from, and then I've got to like manage my exits, but that doesn't have to be too time consuming. So it depends what you want to do.
Okay, fantastic. Thanks for answering those, Jason. All right, we've got plenty of stocks to get through. Before we start, don't forget to like and please subscribe. I want to see 100 likes on one of these shows very soon, if that'd be great. And the comments that are coming through week, it's great. So if you want to shoot a comment after the show, that would be fantastic. It helps. I hear everyone on YouTube videos ask for it because it helps the algorithms, right? So help us help the algorithms do their thing, right? So that'd be great. All right, let's start off with the first one here, and that's from Taufik, and it's CRM. It's just broken out in strong volume. Do you think this could be the start of a bigger trend, or just a short-term pop?
CRM, so we're looking at a US stock, I imagine?
Yeah, N for Nelly.
Oh, N, right. Too early for me because we've still got these declining moving averages. That's not to say that it's not going to fire up and do something good now, but it also, like, who's to say it's not like the rally in September 24 where it was looking really good, rallied back to the moving averages, and then started to go into its decline again. So that said, it's here's zero beneath it, so it's probably not going to emulate what we've seen before because it's going to run out of altitude. I'd be inclined just to wait for now. First step would be like, can it if we get some maybe if we get some sideways price action, hold on to these recent gains and then another breakout would probably be what I'd be looking for. People who are using maybe 10 and 20-day moving averages might be saying, look, this has already gotten above those shorter term moving averages. Maybe they're turning higher. I'm just using these longer ones. It creates fewer signals, and it's just my preferred way of operating. Look, I wouldn't even. Yeah, I'll probably just leave it there for now. For the moment, for me, it's still a downtrend. So I think a bit of caution is probably needed. It's positive we've got these couple of strong moves, but need a little bit more price action at the moment for me.
Okay, fantastic. So Kirby's kick off with MAH, please.
It's I probably wouldn't be in this. I would have been, had I been on that nice trend. This pullback has been enough to have taken out my wide trailing stop, and now it's a case of like, do I want to get in at this stage? Probably not. It's probably a little bit early. It's not really even above the moving averages, and the moving averages are moving sideways, and it's kind of on the moving averages. So I think for me, I'd like to see this another push higher, up towards maybe 34. Start getting those moving averages really pushing to the upside and trending higher. So one to watch, but it's just it's not really in a downtrend. It's not really in an uptrend. It's just kind of in no man's land at the moment. Now it will develop into a trend one way or another, but I'd probably just be on the sidelines with this one just for now. If I was in it, I'd be thinking, look, where's my exit point? I'd be looking at that low from late June. Somewhere below there would probably be where I'd say it's maybe it's not working. It's breaking to a new low. The averages have then started to turn. That's where I'd be probably thinking about getting out if I was in it. But if I wasn't in it, I'd probably be looking to get in maybe a little bit higher.
Okay, fantastic. Next one is CLV.
Was that CLB?
V for Vase.
Oh, LV, CLV. Yeah. So is this has this formed a base, and is it starting to turn higher? I think there's some prospects here. So this has come from quite. Well, it's come from high levels. Has had a substantial decline over the last 5 years. Yeah, it's possible to say there's this is like this is a basing period where the lower lows have given way to rising lows, and price is starting to make new highs, and the most recent price action breaking above the previous high from late June. Moving averages are also starting to trend higher. They haven't done that for some time. Price has gone from below to above. And I like that how prices went from below the moving averages to above. Then we had that sideways consolidation while the moving averages caught up that initial gain. And now we've got that subsequent breakout. I think this is a stock that could be bought at current levels. And if I was to buy it at current levels, I'd probably have probably about a 20% stop back below the 100-day moving average, back below the late June low, and see if it can gain some momentum. Certainly asymmetric upside potential is, could this stock double? Yes, it could double. Doesn't mean it will, but it could. Risking 20% for a possible 100% or more. Yeah, that's an asymmetric setup. So interesting one.
Good one there, Kirby. All right, let's have a look at Maurice's, starting off with Pilbara Minerals. It's PLS, please. I'm starting to learn these off by heart now. I'm not sure if that's worrying or.
There are a few regulars we know. It's interesting in this space generally. Liontown, Core Lithium. What's another one? There's a few of them which they all kind of move together, and there are signs something could be happening at the moment. So we've gone from below the moving averages to above, pulled back to the moving averages. Moving averages still turning. So it's this could develop into something, but it also may not. It's nothing that you can't rule out that it's not simply a move like we saw in October last year, where it rallies above the moving averages. It looks like something could be, maybe it could be basing, maybe it could be turning higher, but then it doesn't. Then it just flounders again. But it's certainly in that space where something could develop. So we're on the right side of the averages. The key now is for it to consolidate above the moving averages. Let these moving averages continue to turn higher, and then it's be a case of possibly buying into a sideways consolidation. So if it can hold its gains over the next few weeks, and maybe we get this sort of price action while the moving averages turn, maybe it is buy it around current levels. And it could be bought at current levels now and just see if it get that sideways consolidation, or saying, okay, let's buy a breakout. So then, you buy a break above the previous, any highs that may develop in this next little period. So I think it's one to watch. Could be bought now. If it was bought now, there's certainly risk with buying. More risk, I think, with buying it now because we don't have an established trend. We just got a potential turnaround. I think it probably needs 20%, and see if it can hold these current levels. Well worth watching.
Okay, fantastic. Next one from Maurice is WC8.
Hasn't quite turned yet. Like it was looking like we had this rally into the moving average, had the sideways consolidation, which I was just talking about. Then we started to get a secondary breakout. So that was an interesting point to think, look, is this worth no, the moving averages haven't quite turned yet, but is this the makings of an early trend? But that hasn't stuck and prices have come back down. So I wouldn't be a buyer at this point. Like had I bought that initial break, I'd probably be looking to close it now because the reason for buying it, the breakout, hasn't stuck. It's come back down. If I was looking to get in, it's now a case of like, can it now stabilize again? Can we get that sideways price action, which then leads to a subsequent break, and maybe the moving average is turning with it. The fact that the moving averages haven't quite turned yet, maybe it's a little bit early. We've seen this sort of thing in the past where it started to get interesting but then declined again. So a touch early for me, worth watching. It certainly could base here and have another leg higher, but given this false break just recently in the pullback, I'd probably just be watching just now.
All right, fantastic. Let's get on to some Hong Kong stocks. Sydney wants us to look at 1571, please.
Yeah, it's starting to get some momentum to it. So the moving averages have crossed, the prices above the averages. We've got this sequence of rising lows. Yeah, I think there's enough here to say this is there's potentially a developing uptrend. Whether it develops, we don't know, but there's enough to say it is potentially developing. Like it could possibly be bought at current levels and then having a stop below that recent low. So that would be like, might be as little as 10% to give this one a go and see whether it does continue to gain momentum. But it's on the right side of the moving averages, rising lows, rising highs. That's the building blocks of an uptrend. We've just got to see whether those blocks continue to stack. But I think risk can be managed around that recent low. So it's worthy of consideration.
Fantastic. The next one is 9988.
Probably more range bound at the moment. It's like, it's possible this is sort of like a rounding base, like cup and handle. We hear people here a bit, and like is this the is that sort of like the cup through there, and then then you put the handle on there. So is this the start of a basing formation, which is going to lead to higher levels? Certainly possible. At the moment, though, we're still really range bound. You can see like we've got a high, we've got a low, and then a lower high and a higher low. So it's contracting. It's in a contracting range at the moment. I'd be inclined just to watch this for now. And if we get some sideways above the moving averages and then a further break higher, maybe that would be the time to go with it. But at the moment, you could find buying at current levels could find that it just continues to meander sideways for a bit longer. So I'd be inclined just to wait for now. If I was already in it, well, and particularly if I was in from lower levels, I'd certainly be holding it. I could use the mid-July low if I didn't have a calculated trailing stop, I could use that as a good sort of risk management point, having a stop below there. But otherwise, I'd be watching for now.
Okay, so Sydney, we're going to do two of every person's, and then we're going to, if we have time, we'll come back to the third. But I know Drone Shield is going to be a topic. It's probably our one of the year at the moment, our ticker of the year. So let's have a look at that one and what that's doing.
Yeah, more pullback this week. It's still elevated above that 50-day moving average. So we talked about this last week in terms of when you get these ones which really skyrocket. Do you make partial profits once you're up to 300-400%? Like we won't go through all that again because that's in last week's. If this was in my portfolio, I'd still be holding it. My wide trailing stop would be below the 100-day moving average. It's giving it a lot of room to move, but that's the requirement for staying on volatile stocks for long periods of time. You do risk giving a sizable portion back, but it's what keeps you on in the first place. So we say we don't want to give much back, but we want to stay on. The two don't go together. You can't do both. You've either got to say, look, I'm going to give stocks room to move to potentially stay on big moves, or I'm just a short term or a swing trader because I can't stay on the big moves. I don't want to don't want to risk giving money back. At this point, the trend's still in place. At this point, this is still a pullback to a large rally. It's still above the 50-day moving average, and the moving averages are still trending higher. This is a risk with these stocks, as I've just gone through. I wouldn't be buying any at this point. I'd want to see it stabilize first before I considered buying any of it. Certainly not a buy, but for me, this would be if I was in, particularly if I'm in from good levels, it's a hold. If I bought at the highs, I'm probably being stopped out. But we wouldn't have bought at the highs because it was just so stretched above the moving averages. This is just the uncomfortable part of staying on big trends, the pullback towards the moving averages. It happens in almost all big trends, and it's often unpleasant. But being able to stay on a large trend is the key to making the big money. Not to say this one will continue on and make new highs. Maybe that's it, but I'd still be open to giving it that room to move for that possibility of higher levels in the months ahead.
Yeah, fantastic. Next one is Superloop, SLC.
I've got some of this one. Had it for a while. As we said, staying on big trends. Can't remember where I got in, but I've had it for a while and it's up a lot. So I'm probably back in from when it was first a motion trader signal, back probably around early last year. There's been a case of staying with it, wide trailing stop below the 100-day moving average. There's been a couple of tests below the 100-day moving average. Can see them off, and it has in my case. It has in motion traders' case. I'm just letting this one run. I haven't taken any profit in it. I'm not considering taking any profit in it at this point. It's up. What am I up? I'm up, I don't know, 250%, 300% maybe. It's on the website. You can have a look on the website and see what I'm up. But yeah, it's the trend's still up, so it's just letting it run with the wide trailing stop.
Okay, fantastic.
Typically, I'm just thinking, nothing to say it can't be bought at current levels either, because it's breaking to new highs. It's not overly stretched above the moving averages. But for me, it's hopefully there's been plenty of opportunities to buy this along the way. It shouldn't be coming to. Well, this is an interesting point as well. Like I was about to say, it shouldn't really be coming to anyone's attention now after such a big rally, but it's only around now that a stock like this starts to make its way into the ASX 300 or ASX 200 and getting wider attention, starting to be picked up by the brokers, followed by the brokers. Broker reports come out. It's and I'm not sure on the particulars of this stock, but often when a lot of these stocks embark on these big rallies, a lot of them are outside the all ordinary, so people aren't following them. This is where having that ability to identify momentum can really be helpful. So a stock like this does get put in front of you at a much earlier stage, other than waiting for it to enter the ASX 200 or whatnot, and your broker picks it up and does a report on it. So momentum is momentum is a bit like opportunity's calling card. So it will draw a stock to your attention. It'll put the spotlight on it. You can have a look at it, hopefully at a relatively early stage, and then consider does it have merit is there a position in my portfolio for it, rather than waiting for it to hit the top 200 and then having a think about it, because like much of the big gains has already been in place. So yeah, I think be open to looking widely and having that ability to scan outside the top stocks, because that's where I find a lot of the really interesting plays are.
Okay, fantastic. Next one along is RTS, please, from Mark.
RTS.
Yep.
Which index might we be looking at? I think we might have something. It would be a NAS. No, that's not a NASDAQ one. It certainly won't be a Russian one.
There's no
I'm not sure
no Australian listing there. That's okay, or no American one that we can see is quite clear. All right, maybe Mark, you can give us some clarity on that. We can come back. Let's have a look at PXA.
Sorry, what was that?
PXA, Alexandra. Wow.
Yeah, running nicely. I think this was a motion trader signal last month. It looks like it met the criteria. Moving averages crossed 70-day high, and pullback, and now it's shot higher. So if I was on this one, I'd be holding, see where it goes. I'd struggle to buy it at current levels because it's so stretched above the 50-day moving average. I'd be thinking, look, there's a potential for a pullback at some point. So I don't think it stacks up as an asymmetric entry point currently, but certainly one I'd very much be holding if I had it. The usual wide trailing stop, see where it goes, see whether this develops into a large trend. Certainly some momentum behind that price rise. If you got on the initial break higher in June, that's terrific. Let it run. That's what I'd be doing. I'd be letting it run, see where it goes.
Okay, fantastic. The next one's from Kelly. AVH, please.
Well, this is under takeover. Oh, no, it's not. No, off that. That's not right. I was thinking of AVJ, is AVH, completely different stock. So, no, downtrend. And I don't want to buy it in a downtrend. I wouldn't be owning it at this point because I would have been stopped out long ago. Had I like the last potential point I would have got in would have been during November last year when it was breaking higher, but then I would have been, my trailing stop or stop loss would have taken me out probably around somewhere in January, and there's been no entry point since. It's like declining moving averages. Price has been below the averages. Like if I was in this stock, it's so hard. Like I know people like hold these stocks for a long time, and they can sit through these big trends, and they end up with these large losses in their account. And it's like, well, do you close something out which is down 60% or 70%? And people say, look, it's come so far, I might as well keep holding. But there's nothing to say it can't, a losing stock can't fall further. That's the problem. But I'm not going to say, it should be sold because I don't know where the bottom's going to be. Maybe this is the low. It is going to start making its way back up. But it's too early for me to be looking at it as a buy. It needs to get back above the moving averages, and the moving averages need to turn higher. At this point, I'd have to say the path of least resistance does remain to the downside.
Okay, fantastic. All right, Peter's asking, he wants to dip into the US small cap ETF rather than purchasing individual stocks. Do you know any ETFs that we can look at around small caps at all? US small caps?
Yeah, there's a locally listed one. There's a couple. So IJR is a Russell 2000 small cap ETF. Just go to the website and check all the details and exactly what it does. Like there's a US listing, so you can use Selfwealth to buy the US listed one, which will have more volume attached to it, more supply and more bids and offers there, or the ASX listed one. So it's the same thing as iShares, but it doesn't trade as actively. So that's one option for doing US small caps. And there's another one which I've spoken about before, and I've spoken about it on my Friday strategy sessions. Not sure whether we've mentioned it here, Rog. It's QSML. It's a Van Eck small cap ex-Australia ETF. So it doesn't have Australian small caps, but it's got global small caps, of which the majority are US based. I've got some of this myself. When did I buy it? I bought it maybe in late June as they were rallying off the moving averages. So that's another way to play small caps. You see it has the same general shape to IJR, and that's probably because it's like largely US small caps. But yeah, there are a couple of ways that US small caps can be done.
Okay, fantastic. Thank you for that. Let's have a look at, so we've done Drone Shield. Let's have a look at VTX, please, from Betty.
VTX, is that correct?
VTX, yep.
Yeah, this is like breaking down. This is the thing. Not every uptrend turns into something big. So this was a trend that was developing nicely. It was looking good. Had we been here, I would have been saying, look, stay with the trend, see where it goes. Wide trailing stop below the 100-day moving average. Well, now we're below the 100-day moving average, so that's sort of like where I'd be getting out. Had I been in, even if I was in at good levels or later levels, it's like the structure's changing. The moving averages are turning lower. Prices below the averages. It's come back so far from its high, so it's going to trigger my stop. I certainly wouldn't be looking to buy this dip because it's on the wrong side of the average. I want to buy the dip when we're coming back to the averages, not when we're declining below it. So not for me to buy. And if I had it, I'd be probably protecting capital. It's not to say that it can't make its way back higher. And this is where people get themselves into a bit of a mess, because they say, look, I don't want to sell now because it might go higher again. And then they get frustrated saying, oh, I knew I should have sold. I sold at the low and now it's back at 30 cents or whatever it may be. The problem is, what if it doesn't go that way? What if the next 10 cents is to the downside and we're down at 9 cents and you don't have an exit strategy? That's when you potentially either given back all of a 200% plus gain, or you've got yourself stuck with a 60% loss. We're never going to pinpoint everything to precisely. Protecting capital is number one ultimately. So that's why I'd be inclined to say, if it was in my portfolio, I'd probably need to move it on rather than be hoping for a recovery, because you always got to ask the question, what if you're wrong? What if it keeps falling? And a trip down to 10 cents is untenable for me. So I'd have no option here. I'd need to move it on. But of course, everyone will do what is in their own, what's best for them.
Okay. PAR?
PAR, so it must be this. Oh,
this one.
It'd be the local one probably. Okay, we'll go with the local one. And something may be setting up here, early stages, but we've gone from below to above the averages. Averages have crossed. I like the impulsive nature of the rally and the corrective appearance of the pullback to the moving averages. If I was holding some of this, I'd be happy to keep holding it, see whether we get some more upward momentum. If I like what they're doing, I wanted to preempt a return to strength, I could possibly buy it at current levels, and then have a stop loss. Maybe it only needs about 15%, because if it gets to 15%, then it starts to give back a significant portion of that rally. Like, you just put some Fibonacci's on there and go, well, it's come back to about 50% now. If it gets below the lower band of the Fibonacci's, well, it's not holding its gains at all. So this is sort of like, if it's going to work out, this is kind of where it probably should start to find support. So as a bit of a speculative play, perhaps buying at current levels, but you're buying against the immediate momentum, which is to the downside. So you take some added risk. That's why I use the word speculative. But some people want to try and get in near the low. So maybe that could be the place, near the moving averages. Alternatively, look to get in on a break higher. But well worth watching. It's will it develop into something? Well, it might not, but it could. And it has those asymmetric properties to mean that it's worth considering. You play lots of hands that look like this. Plenty aren't going to play out, but don't lose too much. And you're going to get a few that break out and run, and that's where the money's made. So that's why I think it's worth consideration.
Okay. KLS from James.
Yeah, very much. It's I like the structure. The moving averages have crossed; they're trending higher, rising lows. So it looks like there's interest in buying this stock on the pullbacks or the pauses. Sideways consolidation. So had that nice rally off the moving averages. It's held onto almost all its gains, just traveling sideways. And it looks to be getting some momentum into it now. It could probably be bought at current levels. And stop could be, an aggressive stock could be just below those recent lows. That's about 7%. Or alternatively, I'd probably prefer about 15%, or at least 10 to 15%, back down below the 50 or the 100-day moving averages, and see whether this develops into a rising trend. We're looking for a trend change with this because the trend has very much been down. So it's a potentially an emerging uptrend. I think it's interesting. I think it's worth having a look at.
All right, good pick there, James. ASM, please.
Volatile, and I'd be. I'd probably prefer to just watch this for now. I'd probably prefer to buy a breakout on this one. So just looking at these recent highs, you can see it's almost, you could almost say this is a contracting range, but it very much is a range bound stock. I don't like this gap lower. It doesn't bode so well. I'd rather had a strong rally off the moving averages. Ideally, then we want to see it traveling sideways, holding the gains and then breaking out, not then gapping lower. So that's a concern. So I probably wouldn't be rushing in to buy it at the moment. I'd probably now, following that gap lower, probably need to see it stabilize again, start to make its way back higher, buy a breakout above these highs at 76 cents. If I was already in it, had I been buying it around the moving averages, well, I could continue holding it for now. I'd probably be looking at maybe either the 10 July low or the 30 June low. One of those, if breaks that sequence of rising lows, I'd probably then be thinking, look, this stock's not really working out. Maybe it's time to move it on. But it could certainly still work out from here. It's gone from below the averages to above. It's broadly moving sideways along the averages. It needs that breakout, it needs that upward momentum, and then the follow-on momentum to start to build a trend. Could still happen, but I don't think we need to rush into it this week.
Yeah. All right. Next one's from Lloyd. Let's have a look at G&G. Guzman and Gomez. G. That's it. No, it's not. That's the one. GR Engineering Services Limited.
Oh, sorry. Which one are we going for, Rog?
GRG was the top one, I believe. Oh no, there was there.
Is it GNG?
Yeah, that's the one, top one. Yeah,
we're going for GNG. Yeah, nice upward trend in place. It's been in place for a while. It's a motion trader stock. I think I've got this one myself. Trend's been in place since motion trader signals back in November last year. Wide trailing stops saw off this corrective period, and it's continuing to unfold from the upside. I'd be simply just letting the trend run, see where it goes. Expect some consolidation at points because it is stretched above the moving average. So I'm probably not looking to I wouldn't be looking to probably buy at the moment. I'd rather look at it on the next consolidation for an entry point. But in terms of staying with a trend, like yes, look at this trend and think like, where's there been a need to exit? And there hasn't been a need to exit throughout any of this. Like, yes, it had this spike below the 100-day moving average, but it was during a time when the moving averages were still trending higher. So it wasn't really a need to sell it at that point. And then from there, it's moved into a contracting trading range, which then broke to the upside. So it's been a case of patiently sitting with a stock that's been working, and the reward has been a gain of coming up to 100%. So I think the play here is to do what's been working, to do what's gotten us to this point in the first place, and that's been staying with the trend.
All right, APZ.
I've got some of this one, and I've had some of this one for ages. So my entry was back, I think it might have been back in 2020. So it's like, it's what appeared to be a pretty sleepy stock, and there was what's that? That's almost an 18-month period, maybe a little bit longer, where it just grounds sideways to lower. Just sat in my portfolios, paid dividends above the wide trailing stop the whole time. So it's just been in the portfolio, and it's actually turns out to be one of my best performing stocks this year. A stock which it's an unsuspecting top performer. Trends in place. I'm holding my portfolio. I like the consolidation at the moment. It's had a strong rally. It's holding on to the gains. Moving averages are catching up while it tracks sideways, so the trend's still very much in place. I probably wouldn't be buying it just at the moment. If I were to add to the position, or if I didn't have someone I was thinking of buying it, I'd probably look to buy a breakout from this range. Maybe there's some more sideways to come, but it's a stock I'm certainly happy hanging on to. Ride the trend, as we always talk about over and over again. The big gains are made through sitting and not actively trying to jump in and out of a stock at every turn. Just try and get the big broader trend, and forget about a good month or two, or every few weeks buying and selling, trying to sell at the high, buy back at the low. It all sounds good, but in practice it's difficult. So better, from my perspective, stay with the overall trend, get the big gain.
100%. All right, Shirley, we've had a look at PLS, so just go back around about the 40-minute mark, I reckon, between 30 and 40-minute mark. But MPL for Shirley, please.
Yeah, just as we were just discussing, trend here is up. If I was looking to, the best time to buy was really when it was like lifting out of this large sideways period, and that was probably back maybe in March or even August last year, or possibly December last year. Was starting to like break higher. It's had this strong rally, so it's certainly one I'd be hanging on to if I had it. Is it a buy? It's had like a zigzag looking correction to the 50-day moving average, so it does look like a corrective move. So I think there's more potential for more upside. I guess someone could, if someone wants to try and buy a dip back to a moving average, this would be a candidate with a stop back below the 100-day moving average. But ideally, it would already be in a portfolio. Been plenty of motion trader signals in this stock, I think, over the last few months. And then it's a matter of staying with what's working.
Fantastic. Jennifer bought MAU off one of your motion trader signals, and it's taken off. Let's have a look at that one.
It's a gold stock, so it's had this big correction like a lot of the gold stocks have had. It doesn't have upward momentum at the moment. There was a motion trader signal, I think around March, so it's not really up much at the moment. Had a bit of a run, but it's come back. If I had this one, I'd keep holding it for now, but it probably really does need to probably needs to hold above the July lows. Starts really getting much breaking below the July lows, getting below the moving averages. It starts to open up downside potential. But that's not the case at the moment. At the moment, moving averages have lost their momentum, but that's what you expect during a consolidation. It's for me it'd be a hold, but probably not. Probably wouldn't be adding to it at the. Probably wouldn't be adding it to at the moment, particularly with gold consolidating. We don't know which way out of gold's trading range gold is going to break. So this is probably a hold for now.
Okay, DEL.
ASX listed, do we think?
Yeah.
Yeah, well, I like the rising lows we have. The moving averages are trending upwards. I think there's I think we've got potential for this rally to extend. It could possibly, given we have the rising lows and the rising moving averages and prices around the moving averages, it probably could be considered at current levels as a buy with then maybe a stop like it's lower price, so the percentages quickly increase. I'm looking at that low point from June, so that would give it below that low point. We give it 23%. More aggressive might be around 15%, but somewhere in that region. And it looks like the interest is in buying it. So you had the pullbacks, and the lows are generally going higher, so the bids seem to be coming up underneath it. My bias would be that we get a push to the upside at some point. So a stock I'd be happy hanging on to, particularly if I'm in from these good levels down here when moving averages first crossed and we first started getting breakouts. So lower price stock, but could still have more upside.
Okay. Keith asks, is it time to eject out of Bannerman and EL8?
I ejected out of EL8. I talked about this on my Friday strategy session about 3 weeks ago. Let me get EL8 up. Start with EL8. So when was it? It must have been when prices broke down below the moving average, broke below the low from June. So I sold my EL8. I bought it on the breakout. So we had from below the averages to above, sideways consolidation, averages crossed, price broke higher. That's all good. That's textbook. Let's give this a go. We've got a structure that could support higher levels. But it didn't play out. Gave back the gains and then broke below the moving averages. That is going to happen. It's not to say that breakouts don't work. It's to say that many breakouts don't work, but we have strategies to cope with that or manage that by cutting the losses relatively early. Get a small loss. That's when we get the follow through buying from a breakout where we can potentially make a lot of money. That didn't happen, so I closed it out. Wasn't doing what I thought it could do. So it's out. Now, if it bases and turns back higher again, you can go back and look at it later on. But for the moment, it's now been consolidating below moving averages, which are rolling over. My concern now is do we see continued downside? So I'm happy to be out of it. If it turns back around, great. We can look at it again. Bannerman, I had a stake in Bannerman, which I sold yesterday at just above current levels. It was $2.78, I think, my exit point. And the reasoning for doing that was the same. It just wasn't following through with why I bought it. So I bought it in late May as prices went from below the averages to above, came back, rallied off the averages. Averages were crossing. So I called it a starter position for uranium, because uranium price looked like it was starting to turn around. Initially, it was looking good. It had a strong breakout, but then that didn't stick. It came back to the averages. I gave it the benefit of the doubt, but it got this sloppy rally off the averages, and then yesterday's decline below the averages was enough to say my reasons for buying are no longer valid. So I just took a small loss and moved it on. I don't know what we're going to see with the uranium plays. Like, Boss Energy had this big gap lower yesterday, and Deep Yellow is probably doing the best of the uranium plays, is holding on to most of its gains. Paladin's been the biggest underperformer of the main tier local uranium plays, and maybe this isn't going to play out. But look, I talk about uranium in the strategy sessions each week. If that's what your interest is, good to come along into those. But from where I am with uranium, it's protecting risk at the moment and basically shutting risk down. And should everything turn back around over the weeks ahead, can come back and revisit it. But at the moment, it's not following the bullish script, which looked like it could have been developing. So shut it down and reassess later.
All right, fantastic. We've got about 10 to go, Jace, just letting you know. So, GRG. GRG? Oh, it's actually GRG. It might look like a good one anyway.
Okay, GRG. GRG? No, that's not. We looked at that code earlier. That's not.
No, we looked at GNG before. There's no GRG.
We were looking for Goodman and Gomez. Anyway, but no GRG there.
All right, let's have a look at we've looked at CHN as one. CRM. We'll CHN, please.
So that's Chalice.
Yep.
So I bought some of this the other day, a little bit higher. So it's like what we talked about earlier with PLS. Same with some of the lithiums, Core Lithium, Linetown Lithium. It could be a turn and play. This next consolidation is all important. Like I need to see it. I want to see it. Like hold its gains. Like if we can see if we see price action where it's just that sideways type price action, and then from there potentially a breakout. That's what I'm looking for. So holding onto its gains is important. If it quickly gives way and it's back down to the 100-day moving average, I'll close my position out and move it on. So is there the early stage of a turn in lithium and rare earths? There could be, but it's nothing's ever for sure. It could be bought at current levels, in which case stop is probably about maybe 15% away. Maybe for me, I'd give it a bit below the July low. It could tick below the July low, consolidate, and then start to rally. Like you could get we've got a strong rally. Maybe we get like a zigzag type decline. So I think all sorts of things, all sorts of price action could play out. But I can see how a bullish pathway could develop. So it's either a more speculative position now, maybe a 15% stop, or see if we get some sideways price action and then buy it closer to the moving averages or buy a breakout. But certainly a play in the makings. Let's watch the price action and see what develops.
LTR. What would be your trailing stop if bought?
There we go. The two of them go together.
Yeah. What would be your trailing stop if bought today?
Well, it wouldn't be a trailing stop if I bought today because it'd be an initial stop. So the trailing stop kicks in as the price starts to rise, and then so it trails. So the initial stop, if I bought this today, would be just below the 100-day moving average, or maybe even a little bit higher. I'd say if it comes back 12%, like gets back below, got that high from July. Below the 50-day moving average, below the July high, below the 17 July low, I'd say this is not working. I'll probably cut my position and move it on. I think it really needs to hold the line here and just start to stabilize, get some sideways, let the moving averages come up underneath, and then potentially move higher from there. But this is like now's the time to get a foothold and for the stock to find a foothold and stop this decline. If it continues like this, I'll be up tomorrow. Not going to hang around if it's not doing the right thing. I was buying into momentum and a potential turn, but if the price action doesn't support that and it gives way, small early loss is better than a large late loss.
All right, fantastic. We looked at Pilbara Minerals already, but even though PFIDLR is a subscriber and it's great, given him a lot of amazing signals, it looks like. So have a lot of time.
Fantastic.
A couple of winners from Motion Trader there, Jace. So good one there. If you have time, DYL, please. Digby.
BYL?
DYL.
Oh, that's DPL. I kind of touched on that before, but that's the best performer of the locals. It's trading up near, I think it's trading up at all-time highs. Well, certainly highs from its from the last few years. Uranium's such a tricky one at the moment. Like, you look at the biggest uranium producer, or the biggest is it? What's the biggest North American producer? It's either the biggest or the second largest overall producer. Cameco. It's trading at all-time highs. Oh, is it all-time high? It's all-time highs at least for this run. I think it might have gone higher back in the last boom in uranium, but it's been trending really well. Then you look at the local stocks, which we just went through, and they're not traveling well. So it's like this is more of an institutional stock because it's a big stock. So if you're a big fund manager and want some uranium exposure, this is probably your go-to stock. You're probably not going to the local uranium listings, not all of which are producers either. Looking at DPLO, if I had this, I'd be holding it. I wouldn't be buying it at this point, just giving that unraveling we're seeing in some of the other local uranium plays. But if I was in, particularly if I'm in down here at good levels, I'd be holding it because it's not doing anything wrong at the moment. It's had a run and it's having a pullback to the 50-day moving average. There's nothing untoward about that. It's key now is it's got to just now stabilize and probably do some sideways around this region to build a new base. But at the moment, for me, this would be a hold.
Okay, fantastic. Let's look at PMT. Chart's looking really strong. M for Mary, sorry.
Oh, that's good because that chart's not looking very strong. I was a bit concerned for a moment.
T, yeah.
PMT. Yes, this looks a bit different. Yes, so above the moving averages crossing, all those good things. If I was in this one, I'd be staying in this one and seeing where it goes. Starting to get the makings of a consolidation now or a pullback, and so far so good. It's holding on to most of its gains, so it's gone up a lot quickly, and it's holding them. So probably don't want to buy any just here at the moment because it is still stretched and maybe there's some more consolidation to come. But I'd be very happy holding on for now and see whether this develops into something larger. Like, it's fallen a great way. It's certainly plenty of space above where it could go. So yeah, that's a nice one if you're already on at lower levels.
All right, fantastic. PWH.
The makings of something here. It's been nothing to see for much of last year and this year so far, but now we're back above the averages and the averages are crossing. I'd probably give it a little bit more time. So it's had that initial move from below to above. Do we get a bit of consolidation while the moving averages fully cross and start to trend higher? Certainly worth keeping an eye on. If I already happened to have bought some a little bit earlier, great, see where it goes. If I was looking to get in, I'd probably be inclined to wait. That said, buying at current levels with a stop back below the usual moving averages probably could be considered as well.
Okay, fantastic. Let's look at TTT.
Yeah, trend still in place. Looks like a corrective pullback to the moving averages at this point. Probably want to see it hold on to its recent lows. If it breaks below the recent low, well, then we start to develop a series of lower lows. But yeah, that's not where we are at the moment. Look, my trailing stop on this would still be quite a bit lower. It'd be maybe I think it's the motion trader stock as well. So there will be a calculated trailing stop on it, but it'd be it'd be meaningfully below the 100-day moving average, just looking at the price structure. But yeah, and this is why we use wide trailing stops as well. Like, look at these pullbacks along the way. You need to give them plenty of room to move. I'd be staying on board for the potential of a further break higher. If I like this stock, I probably could buy it at current levels, have a stop. Just about, maybe it still requires a bit of a stop, maybe at 15%, to see whether this is, because this looks like a wedging type of structure. So you get the rally, and you get the the wedging structure into the pullback, and then you get the break to the top side. That's often how that will play out. So buying at current levels with a stop lower, or buying a breakout above maybe the high from mid July.
Okay, fantastic. I think you mentioned BOS before, so let's have a look at that. Got an attention yesterday, but further dropping today.
BOS.
Yeah.
I think that might be BOE, so Boss Energy, which is BOE, which we've discussed. So Boss Energy, BOSS, and BOE is a code. So if we're
talking about both, because it looks like BOS is a code, but yeah, all right, let's have a look at both. Yep, that's fine.
Yeah, so BOE had the big decline yesterday. We talked about that being a uranium stock. Came out with their production wasn't as much as the market was expecting. If I was holding this would be an exit for me. It's just like something's not right, so I'd be getting out. If it were BOS, I don't think this is an ASX stock. BOS, so there's no ticker code BOS locally.
Okay, so we might be on the right track with that one then. Let's have a look at 360, please.
Just on this, because I did do it pretty quickly. Look, it was a motion trader stop as well, and hit its stop loss yesterday, so that just makes it an exit. If I was in this myself, I'd be looking to close it out. Whether I sold it now, or maybe if there's any sort of rebound over the next few days, I'd be looking to probably sell it into the rebound. But yeah, it's just a weak technical structure now. It's gap lowers are generally not great things on charts. They cause a lot of technical damage, and they generally take time for that damage to be repaired. So it's probably not a stock we're going to see new highs on anytime too soon. Sorry, Rog, what was that next one?
360, thanks.
Yeah, trend's still up. It's if I was in it, I'd be letting the trend continue to run. I don't want to buy it at this point. Probably it's getting elevated above those moving averages, and when it gets elevated, it just increases the prospects of some sort of consolidation at least. But yeah, I'd be happily letting a position in this run. Rising moving averages, price above the averages, textbook uptrend.
Okay, TLX.
We spoke. I think we spoke about this last week or the week before. It must have been last week, and it was trading below the moving averages, consolidating below the moving averages, which made it vulnerable. But it was still the potential of this being a sideways consolidation. But now we've got the break lower. This for me would be a stock I don't want to be in anymore. It's we've got lower lows. The highs are getting lower as well. We're making new lows below declining moving averages. So the risk now has just become even more elevated, and it's open to the possibility that it does continue to lose ground from here. Whether a longer lasting downtrend develops, we don't know, but that's certainly the risk. So that's why I wouldn't want to keep holding, because what if it's down here at $16, $14 in the months ahead? So I'd rather cut it now, and if it goes back up and gets back above the moving averages, well, could always consider getting back in at a higher level. But if this building momentum to the downside continues, you can't then go back and get out where you might have wished you had gotten out. So I'd be looking to exit a stock like this probably around now.
Okay, 3 more to go, Jose. NEU, please.
Yeah, starting to get that momentum to the top side. Yeah, got back above the averages, and we sort of just had some sideways work and a secondary breakout. So I'd be moving averages trending higher. So yeah, look, if I had some, I'd be holding it. It was it's just whether I'd want to buy some just here. I think the better buy was probably maybe a week or two ago, just as it was like lifting out of this consolidation, just paying a little bit more for it. But maybe that's okay. Maybe it is a buy at current levels, and it's probably looking at like probably needs a 20% initial stop, just to using these previous highs and low, and the 50-day moving averages, sort of like the as your lower boundary protection points, and if it were to come down and breach those, you'd probably say, look, it's not working, it's not following through. So that'd be the exit point. But yeah, hanging on for now if I was in it.
All right. The next one would be AZY from Davina.
Yeah, I've got some of this, and I got in as it was lifting off, and now it's come back. It's come back quickly. I don't like it when they come back quickly, although you can see, this stock has done that before and stabilized and gone back up. But I do prefer when it rallies and you get more sideways and holds onto its gains. So this one's still above its motion trader trailing stop. I'm not sure where it is offhand, but it's probably not too far away now. I wouldn't be buying any at this point, but I'm still holding my own position for now. Probably doesn't have too much longer left into it. It's I'm guessing it's a gold orientated stock, because it looks like some of the price action we've seen in some of the local gold plays really does need to start to hold the line here and get back above the moving averages to keep it in play.
Okay. Last one, WDS, please.
And this has started to turn around. I was talking about this in the Friday strategy session, rallying off the moving averages. So this gap, so first we had the strong move high. So this is when the oil price surged upwards, when there was the attacks on Iran, and then the next week the oil price gapped lower, and you had a gap lower in Woodside. Then what's been interesting with Woodside, it has stabilized around the moving averages and started to move higher. So I think maybe we could be at a turning point for Woodside. So if I was in Woodside, I'd be happy holding it here, seeing whether this can develop into more of a trend. If I wasn't in, I was considering it. Would you like getting at current levels? I think it requires probably a 15% stop back below the moving averages, get back below that low from late June. It could be considered at current levels, although I wouldn't be surprised if we did see it come back, because we've got that high from June. We could see it come back and just do some sideways trading while the moving averages catch up. So I probably wouldn't rush into it now. I'd probably be inclined to watch it and see whether we get, see if we get this sort of price action while the moving averages catch up, and then from there, maybe we get a breakout. Like, that would be textbook. We often don't get textbook, but we'll see, because we do see this sort of structure a lot. Interesting one. Let's keep an eye on this one, Rog. I think it could be something of interest.
Good one. All right. Thank you, everybody, for your tickets. Sorry we couldn't get to everyone's, obviously, but we are running over time once again. So thanks again, Jace, for going over time with us or with me. I'm just going to top it off with 2 takeaways for today, right, if you don't mind. And one's from Kirby, and they sort of relate, right? Reaction to the news and everything else, for that matter, is reflected in the chart. So follow the price and the volume action. I think that's a great little saying. But one from you, a great way of thinking, right? One from you, Jason, that kind of relates, I think. And I hope everyone can relate to this as well. So I don't know where the market is going, but I know what I'll do when it goes. I'm probably paraphrasing you a little bit there, Jace, but I just think that is a great takeaway from today. If we can all have this system where we know what we'll do when, whatever the market does, right? So fantastic teachings and learnings along with everyone's tickers that we can walk away with here, right? I hope we walk away a little bit more inspired for the week. Thank you very much, Chase. Thanks for another great week.
So the saying, Rog, that I say, I don't know what the market's going to do next, but I know what I'll do no matter what the market does.
There you go.
Having those rules. So you're pretty close.
So I have to paraphrase, but
that was great. Thanks, Rog. Thanks, everyone, for coming in and joining us. It's been fun as always.
I'm going to be using this a lot, Jason, just letting you know, mate, but I will credit you, no worries. Thanks, everybody, once again for another great Mammoth session, and we look forward to seeing you again next week. Don't forget to do all your stuff like and subscribe, and do well in the markets as well. Thank you, everyone. Have a great weekend. Bye-bye.